Well, we'll try to assess what global markets have been doing, and they've continued in a tailspin. There was a little bit of consistent green that we had seen over the last week or so, which has now again ebbed. There is a sea of red, at least the way we see it as of today. In fact, US stocks have fallen as oil prices have continued to climb. And geopolitical situation continues to get more and more complicated, with President Biden going to Europe to pressure Russia on withdrawing troops from Ukraine. Well, investors continue to seem also worried about the economic outlook, with inflation being at multi-decadal highs. All three US indices were in the red on Wednesday, with the Dow down 1.3%, the S&P 500 down around 1.25%, and the Nasdaq also fell 1.3%. So all three US indices in the red, and well in the red, over 1% down. Moving quickly on to what Europe has been doing. Well, European stocks closed lower, largely because that UK inflation number has come in at 6.2%, which is the highest since 1992. And UK has further cut taxes, including taxes on oil and a tax reduction for workers, largely on the fear that the standard of living will fall due to this higher inflation. So the DAX has fallen 1.3% as well. The FTSE was down around 0.25%. The CAC 40 and the Stock 600 down around 1 to 1.2% or thereabouts. When we look at Asia, yesterday it was largely in the green, but Asian markets have had a weak start in early trade today, with the Nikkei down over 1%. In fact, the only index clinging on to a semblance of green is the ASX 200, which is up around 0.1% or so. The Shanghai is down 0.2%, the Hang Seng down around 0.33%, and the Kospi 2 is down around 0.2% or so. When we look at the SGX Nifty, it's down 0.33% as well, in what looks like negative cues, especially for Indian markets, and that is not good news. When we look at commodities, the other pressure point on global markets, which I did not mention, was oil prices going up. So the oil price spike again has seen some amount of pressure for the commodities basket, with oil up to around $115 a barrel and Brent breaching the $120 a barrel mark. This is largely driven by a disruption of the Caspian pipeline, which is adding to the supply fears, as well as, of course, global geopolitics, which continues to mar the way in which commodities are moving. Gold has continued to gain, of course, inflation concerns adding to that. It's up over 1% over yesterday's rate, so it's at around the $1,945 an ounce mark. When we move on to the dollar, the bond yields as well as crypto, well, the dollar index continued to gain in early trade today. It was at 98.7 in early trade. The 10-year US Treasury yields have cooled. They've cooled from 2.4% yesterday to 2.32% today, again largely on the back of the uncertainties which have been playing out. And crypto is marginally higher in this environment as expected, with Bitcoin just below that 43,000 US dollar mark. Broadly, negative sentiment in Indian markets, looking at a negative start, at least at the moment.